I'm Ryan Iverson, and this is the Investor Breakout Weekly Insight. Let's talk about what happened this week. A major supply crunch is building in one of the world's most important commodities, copper. And it starts in Chile. Chile is the world's largest copper producer, but output is now falling. Production dropped about 3% in January alone, with major producers like Codelco seeing even steeper declines. And this is not a short-term issue. This is structural. Ore grades are declining at aging mines. Water is becoming scarce in the Atacama Desert, and new projects are facing longer timelines, higher costs, and stricter regulations. Even when companies want to expand, it is getting harder to do it. Permitting is slower, costs are rising, and labor disruptions are adding more pressure. So supply is tightening. At the same time, demand is accelerating. Copper is critical for electrification, AI infrastructure, data centers, and renewable energy. And that demand is only growing. The result is a widening gap. Some estimates now point to a global copper deficit that could exceed 6 million tons annually in the coming years. And there is no quick fix. New mines can take 15 to 20 years to develop, meaning today's shortages could shape the market for the next decade. This is why copper prices are pushing higher, and why some are starting to talk about greenflation, where the cost of energy transition itself begins to rise. A tightening supply story in a world that needs more copper than ever. A potential SpaceX IPO is starting to raise a different kind of concern. Not whether it succeeds, but what it does to everything else. Elon Musk's SpaceX is reportedly targeting a $75 billion IPO, a deal so large there is really no precedent for it. And that is the challenge. Investors have nothing comparable to anchor expectations. No playbook for how a deal of this size trades once it hits the market. What we do know is this. Musk has a track record of pulling in massive investor demand. His ecosystem, often called the Muskonomy, tends to concentrate capital and attention in a way few companies can. Tesla is an obvious example. It went public at around $1.6 billion. Today is worth more than $1.3 trillion. So demand for SpaceX is not the question, but supply might be. Analysts warn that a deal this large could absorb a huge share of investor capital, crowding out other companies trying to go public in an already fragile market. IPO activity is down, volatility is up, and even strong companies may need to price lower just to get deals done. In that kind of environment, a blockbuster listing does not just lead the market, it can dominate it. Follow Investor Breakout and get the top 5 Scottsdale Capital event picks, powered by insights from over 70 professional investors. I'm Ryan Iverson, and we'll see you next week.